All right, what's going on, everybody? Hope you had a good day today. Happy Tuesday. I want to do a breakdown of my trade from this morning, from the 11:30 smart money reversal right here, targeting this internal range liquidity. So first and foremost, let's just break down some of the logic, right? So what we can see recently on the NASDAQ is we just have been having expansions, retracements, and expansions and retracements, right? So the market is clearly in a trending profile, right? We were initially chopping here, right? Just kind of consolidating between a range high and range low, especially kind of within the confines of this range here. We broke out of that, and then the market has been in a trending profile. So, what does the market do when it is in a trending profile? Well, simply put, the market will expand through external range liquidity, and then it will seek to rebalance internal range liquidity in the form of fair value gaps. From there, that is the catalyst for then the market to seek external range liquidity in the form of old lows or old highs, seek to rebalance inefficiencies and internal range liquidity in the form of fair value gaps, so on and so forth, until a high time frame draw gets met. So let's go to the 15-minute today, right? And what we could see is that today we had very much the same thing. 9 a.m. rather pre-New York formed a high here at internal range liquidity, and then we saw an expansion lower. So I did not trade this expansion lower. What I did do though was I anticipated that since we were forming an expansion here, I was anticipating on getting involved with a trade to target internal range liquidity in the form of some sort of premium array. Okay, so once this low was put in here at 10:15, we actually had formed SMT with ES at an old daily low. So this low right here, we'll get it close. This low right here, this low is actually the low of the month, the February low, okay? ES was taking that low, NQ failing to take it. So we have SMT on a high time frame basis, okay? Now, initially, during my executions, you'll actually see that I did go long in here. I did get stopped for a small portion, not a full loss, but you'll see it on the executions. After that, what I was seeing was we formed this swing high in here, and then we ran lower, tagging -4 standard deviations of this breaker manipulation leg here, right? From this swing high to this swing low. This is your manipulation. That was responsible for the expansion during pre-market and then the open. We tag -4 standard deviation. Why is this significant? Well, it's significant because typically we see distributions based off of the measurement and the projection of a manipulation. So using that, we can also, or I can also say that when price reaches two price areas, -2 and -2.5, or -4, we typically are going to see retracements occur. When price hits -4 standard deviations of a manipulation or a breaker leg, you can often anticipate that if it lines up with a POI, a high time frame POI, like a high time frame liquidity level or a fair value gap on the high time frame, and we see SMT, you can anticipate that this is kind of the max expansion, and then you're going to see retracements. So I was utilizing that logic here for this trade idea, right? We formed this low resting just above -4. We had already formed the SMT with ES. And then we actually went on formed this swing high to then go run this low here. This is forming a swing point on the 15-minute. This is key because of one simple phrase or one simple thing. Markets do not reverse without what's called an institutional swing point or a breaker swing point. Either a breaker swing point or a failure swing point. In this case, today, it was the breaker swing point, which is higher probability to me. So down here, You can also look on the low time frames and you can see that this is kind of an accumulation, manipulation. Now we can anticipate distribution. So let's dig into this 11:30 trade. Now you could see we also were forming 5-minute breakers here. This is also a high time frame breaker. This is the 15-minute. And we see we swept this low. We did not form SMT with ES at this low, but if you look at YM, you can see YM actually failed to reach this low, marking SMT on the shorter term. So we don't only have SMT at the low of the month, we also have SMT with this short-term low here. So you can witness NQ forming the breaker swing point with the swing low, swing high, lower swing low. And then you can witness the failure swing point with YM forming the swing low, swing high, higher swing low. So once price tagged this -4 standard deviation, I began dropping to the low time frame because I knew that we had our SMTs in place, right? We had our higher time frame POI being the previous monthly low, or rather the current month low. We had double SMT, the SMT being at the Feb low with ES, as well as the short-term low with YM. Now all I'm looking for is a breaker inside macro window, right? The macro windows I'm using are going to be XX50 to XX10 or XX20 to XX40. XX20 to XX40 is what happened today. These are considered more or less like SMR windows. They do serve a very similar purpose to macros, but a little bit different. You typically do see SMRs form within these 20 to 40 windows. That is for another time though. What we can see here, right, is 11:30 opening price. Let's mark that. We open, trade below, tag -4 standard deviation. And we also have, right, kind of a fractal swing point forming. Swing low, swing high, lower swing low. Okay, that is our breaker leg. Now, the up close candle within this sequence is going to be your breaker. Yeah, we'll go green. Oops. You can see it's nested with that 11:30 opening price. And you can see that it's inside of the 11:20 to 11:40 macro. So closures above this high confirms the breaker. Closures above the 11:30 opening price is suggesting that we are going to continue higher from there and that the manipulation is set. Now, the way that I entered, the best way to enter is to wait for the breaker to form, which it did. How I entered was I actually entered down in here with the notion that this -4 standard deviation was going to hold, and then I could have a temporary stop at the February low. So I actually scaled in a little bit earlier, and then I added on the confirmation of the breaker. So let's see where we can look for potential draws. So short-term liquidity is going to be this high. Okay. Just mark that in black. We'll call that minor buy side. This is the current swing high. This is the high of the 15-minute breaker that we anticipate to be formed. Top left. Now, in terms of projecting the manipulation again, just like we did for finding the reversal, we're going to use the standard deviation of the breaker leg to anticipate possible expansion. What can we see? 2, 2.5 lines up here. That is a good area to partial. And then I wanted to see us get up into premium of this total range here. So if I just go from this high down to the very low, I gather my premium and discount range. And I want to see us get into a premium before considering continuations lower. What do we see here? What's above this 50% line? 2.5, as well as this 10 a.m. opening price. also an hourly SIBI. So this is kind of your first premium array. So this for me was a good spot to full exit. I'm not going to be anticipating a full-on reversal because I still have to admit that the market is still trending lower, and I'm simply just trading a retracement to internal. Okay. So your entry kind of comes inside of this breaker. And then you can partial up at 2.5, and up here. Okay. Now in terms of management, let's go to the M&Q chart. Oops. Let's throw on some executions. You're going to see, you can see here, trade of 8. It's not a paper account. I'm going to show executions. This is the initial loss that I took. Small loss. You can see the ads in here. Now, I did add a little bit earlier, prior to the breaker being formed, because we actually did have a cheeky little inversion in here, and we flipped the 11:30 opening price. So I was actually anticipating the breaker to form, but this at 11:43 is your safest entry. I partialed up at this short-term high that we created SMT at, and then also at -2 standard deviation. From there, I held up into here, where we formed SMT at the hourly SIBI, and then up in here, I full closed once we got into that hourly SIBI. So that was the trade idea from beginning to terminus, inception to terminus. Really simple model, guys. It's pretty simple across the board, right? All you're waiting for is higher time frame liquidity pool, SMT, breaker, and macro. Like, those are 3 foundational topics, subjects that you're going to need with pretty much every single smart money reversal on any fractal basis that you're going to take. So I'm going to do more of these breakdowns for you guys. I enjoy doing them. Let me know what you guys thought. If you learned anything, if you have any more questions, feel free to let me know. But until I speak to you guys next time, be safe.